the Property Pod. Welcome to the Property Pod with Moneyweb. The property sector is an ever-changing sector. And in this podcast series, your host, Suren Naidu, chats to movers and shakers in the property industry.
A hearty hello and welcome to the 150th episode of the Property Pod. We are coming to you from Moneyweb Studios in Houghton. And there is a bit of sun out in Johannesburg, believe it or not. This is the big milestone for South Africa's premier property investor podcast, a weekly show where we gain insider insights from leading executives, analysts, developers and entrepreneurs in the country's expansive property industry. We have come a long way since the first pilot of the show back in 2020, which became a regular feature in 2021 and a weekly podcast over the last year or two. I have a famous guest on the show, the famous Simon Brown. Simon founded Just One Lap in 2011. He's an independent analyst and, of course, he's a media personality and host of the daily Moneyweb Now podcast, which launched on Moneyweb during the COVID lockdowns, believe it or not, a while back now. One of Simon's best reads and listened to pods on Moneyweb Now last year was an episode in October titled Simon's Take, Why Renting a Home is Better Than Buying. And that's the subject I'm delving into with Simon. Now, the market has changed a bit with 3 repo rate cuts since then. Thus, the prime rate is also down. A bit of a mouthful there, Simon, but I think it's a pet topic of yours in one way or another. Welcome to the Property Pod.
Thank you, and congrats on 150.
Thank you. From the famous Simon Brown, I know Moneyweb Now is one of our best listened to podcasts, so congratulations from that perspective. Simon, before we go into buying versus renting a residential property that is, what's your thoughts on rates? Will we see a cut or pause from SARB later this month?
I think we're still going to continue to cut. I really do. Our real rates are really, really high. I have Dr. Rudolf Botha on the show from time to time, and he rails against the MPC. He's not wrong. I mean, we can debate where it should be, but it is high. And I don't think the US pausing, because I do think the US is going to stay paused, is necessarily going to have a huge implication on us. We've got space. Our inflation is incredibly low. I know the governor would like a 3% target, but technically we're at 3.2, which is the bottom of the range. We've got that wiggle room. And the inflation that we see in our economy is not because of consumption. We know that because of GDP data. It's simply because of a sort of administrated Eskom, water, those sort of things. And frankly, a stronger rand. I mean, we're having a bit of a collapse in the dollar. Stronger rand also perhaps strengthens the case for an inflation cut. We should see. I mean, if things stay, April's going to be a lovely petrol price decrease.
Let's hope so. I know inflation ticked up a little bit in the latest reading, but the rand is almost touching 18 rand. Who would have thought? I know you've been quite vocal about it, on how conservative the SARB MPC has been and the whole thing around real interest rates being much higher. You mentioned Rudolf Botha. He has been much more vocal about it. Obviously, you are a host, so you do share your views, but you want to hear what other people have to say. More insight on that?
So real rates is essentially prime less inflation. So let's call prime 11, which is where it's at. Inflation's 3.2. That gives us a real rate of around 7.8. If we go back 20 years ago to the days of Mboweni, Manuel and Mbeki, our real rate was about maybe 4.5. Under Joe Marcus as Reserve Bank Governor, at times it was sort of in the 3.5. Oh. So we are sitting, we could cut our prime to 10 and we would still have a high real rate. Is prime going to 9? No. Could prime go to this year? Could we see another 2-3 rate cuts? I think we could. I think we could get to 10.25, 10.5. I would caution that there are risks out there. I would also add that there are always risks out there. Risks aren't new. They kind of move around and are in different places. But I do think that we have got scope for some more cuts. 0.25% cuts, nothing too generous, nothing too aggressive. March, maybe a bit of a pause at the next one and then kick up again. The risk is, and what the SARB has spoken about before, is that if we cut our rates too far, money flows out because suddenly our rates aren't attractive. That weakens the rand, and of course that brings inflation. Again, not consumer-driven inflation, not demand inflation, but imported inflation effectively. Not wrong about that, but I think we've got wiggle room at this point in time with where rates and inflation are. And I don't think, all the estimates are that inflation's going to edge higher and might get as high as 4.4, 4.5, which is, the number the governor always mentions. That's the mid of the target range. We don't have to, inflation is not going to pop out above the 6 anytime soon.
We'll have to wait and see. This is the Property Pod, so turning to the topic at hand, do you think renting is better than buying in South Africa with those rate cuts that we've seen and the possibility of more interest rate cuts? Have you changed your mind, or has it tempered a little bit on that view?
It hasn't, because the interest rates is only one part of the equation. And as a renter, to a degree, those interest rates will filter through to you. You've got a lease. If prime's gone up 3% during the period of the lease, at the end of the period, you're going to get an increase. Now, what you don't get on your lease is decreases. Although you do get, my lease renewed October last year. I think my increase was 1.6% because the landlord wanted to keep the tenant in, etc. But part of the benefit is that you sign a lease. That's your cost for 12 months. You sign a bond. You know what your cost is now until the next MPC. And, there were folks who got bonds at 7% during the pandemic lows. We got to, almost 12%. That put insane pressure on households and is in part why we've got a consumer who's so under pressure. The inflation hurt, but the interest rate increases really put pressure on our consumers.
Are you talking purely from a Johannesburg perspective? Because it's a lot more expensive to stay in Cape Town, but I suppose to buy a house it's more practical actually, if you think about it, to actually rent in Cape Town.
Well, so there is the magic number. I mean, look, Cape Town is a different ballgame in its entirety, particularly the Atlantic Seaboard, and I'll touch on that in a second. But in essence, I mean, what I'm paying at my rent right now, if I was to be buying that apartment and paying my rates and all the levies and everything else, it would be costing me about twice a month what I'm currently paying on rent. So someone will say, but you're paying somebody else's bond. Yeah, but I'm only paying half their bond, and it's that magic number. Now, we moved at a time where finding quality tenants was difficult. And I stress we are borderline quality tenants, but nonetheless, it was difficult to find those quality tenants. So how do you do it? Well, you make it attractive on price. The argument is always, to your point around Cape Town, particularly the Atlantic Seaboard, rents are high, but properties are high. I just sold an apartment a year and a half. Well, actually, it sold last year only here in Johannesburg. That same apartment in the Atlantic Seaboard would cost 3 to 4 times more. Exactly the same size, parking, etc. Of course, you've got a sea view instead of a Joburg view, but it's 3 to 4 times. And folks will say, I bought a house in Atlantic Seaboard and it's done great. Sure, has it beaten the Nasdaq? Has it beaten the S&P 500? I mean, great is relative. If you buy a property and it doubles in value over the 20-year bond, you've gone nowhere. In fact, you've gone backwards because your interest is equal to the bond. So R1 million bond, you've paid back 2 million, it doubled. You haven't made money, you've lost money because of inflation.
Okay. My next question you kind of answered there, but it was around, do you invest in property then? So clearly buy-to-let, listed property. Is it, just comments around that side?
So for me, it's listed property. I like property as an asset class, but I want it listed because then I'm the passive owner. And when the geyser breaks, they don't phone me. There's different management. But also what's very important is the skill set. They have experts. You speak to the REITs in this country. These are people who are deeply involved. They know property. They can look at a building and in minutes get a sense of whether it's over or undervalued. I look at a building and say, that's pretty. And that's part of the trick. With the buy-to-let, there's a couple of issues. Firstly, what's our skill set? We all have skills. Mine is talking. Mine is not knowing what's a good buy or a bad buy or something. You also need critical mass. I had a friend I know, a chap in Pretoria, he got to around 40 properties. And at that point, you're at critical mass. You can employ someone to do maintenance. You can employ someone to do admin for you. He wanted very particular properties, garden flats, 2 bedrooms, so starter families. They would typically stay 3, 5, 7 years. Then they would go and buy their own. So he had his niche and he worked hard at getting that scale. one or two properties, you haven't got that critical mass. And it's a lot more work effort. And, everyone's like, my tenant pays the bond. Sure, unless the tenant, breaks something, unless the tenant doesn't pay the rent, unless you've got a month or two where the apartment is empty while you're changing tenants. All of those sort of issues make me say, for me, some people can do the buy-to-let. For me, property, REITs, and I'm in the REIT space, I'm even lazier. ETF REITs.
Well, you're hearing more of that now. Simon, this is more kind of a generic question, but land and property is close to the hearts of many South Africans, considering our history. What do you say to South Africans who don't have a house, but considering that history, they feel that having a house is important, having a property shows you've made it in life. Yeah. What's your comment to that?
You cannot deny that. That is, property is emotional. To your point, we've got a history in this country around land, and that makes it even more emotional. But if we didn't have the history around land that we have in South Africa, if we were, living in Europe or America or Brazil or wherever the case may be, there's still that sense of, I've made it when you've got a house. Our desire as South Africans to own where we live is not unique to us in South Africa. It is a global phenomenon. The sense of, I can put a hole in the wall, no one can kick me out. Of course, if you've got a bond and you don't pay it, the bank can pay you out. So the property process is completely emotional, both in the sense of the desire to own. And the point I was saying before we hit record, my wife and I moved about 18 months ago into into renting. We finally sold our apartment last year. We had owned from 1998. So we had owned property because my wife fell into exactly that. I was the first generation in my family to own a property, and it is emotional. It's also emotional that you see a property and you just fall in love with it. Oh, it's beautiful. Look at that sparkly pool. And you kind of blind yourself to the stark reality. But it is more than anything, I think, because the numbers simply don't lie. The numbers for owning a residential property in South Africa are, you're barely beating inflation at best. You're certainly not beating the equity market. You're not beating offshore markets. Mag 7 has left you in the dust. So a lot of it is around emotion, around that desire to want to own your property and to be able to say, this is my house, my castle in a sense.
Well, you've hit the head there. We have had some stories on Moneyweb, particularly from the Joburg side of things, where you haven't made money in Johannesburg, especially after in the last 10 years or so, with things quite static. Will you ever think about buying a property in the future to go back to stay then? And maybe just to conclude, what advice would you give those renting a property to get the best deal? Are you in that place to give that sort of advice?
Would we buy a property again? Quite possibly. At some point, my wife and I get to retirement age, and then it just, from what the options out there, it just seems more practical to buy. Although there obviously, there's life rights. There's many different ways of doing it. There, we've only been renters a year and a half. Maybe at some point we get tired of not being able to hang our pictures, or tired of being, landlords being treating us poorly. I don't know. So I never say never, and truthfully, I've in my adult life I have owned more than I have rented, and of the ones I've owned, to your point, the last one I sold for the price I paid 7 years earlier, which apparently in Joburg is called winning. The previous property, also in Joburg, I made 5% in 9 years, not per year, 5%. It was, and that's after all costs. For those who think you're a renter, you want to get onto the property ladder, understand that this is not an investment. It's a home. It's where you live. Understand that there are costs left, right, and center. Transfer costs, lawyer fees. When you sell, there are agent fees. There is maintenance. That should be ideally about 2% a year. Now, if it's an older house, more. If it's a newer, perhaps less in that regard. Deposit works. Get the biggest deposit you possibly can. Rent for another year if it gives you another 10% for that deposit. And then when you're buying, keep it small. And by small, I mean in terms of price. I see it too often. The bank gives you pre-approval and gives you a number, and that's immediately the number you want to spend on, as opposed to coming at it from the other direction, which is, what's my budget? What actually fits within my budget? And then a last point is, we talk around 20-year bonds. The average South African owns their home for 7 years before moving. Location matters, and understand that our lifestyle changes. You might not have kids now, but if you're planning on kids, well, where's the school? Or maybe your kids are in their teens, in which case, well, if those sort of things. Try and think longer term rather than just today, because in 5 or 10 years, things will be different in your life potentially. And in an ideal world, we want to hold the property longer. Quick last point. Once you've done it, firstly, change the date that you pay the bond to your pay date, because those couple of days early can make a significant difference.
Okay.
Pay 10% more from day one. Never decrease, increase the amount that you pay every year with your salary increase. So you're always paying more. You do those 3 tips, you can practically pay off a bond in 7 to 8 years. And that is a game changer.
Well, we've had a few pods on that and offering that sort of advice. But Simon, it's been a pleasure on our 150th pod. I appreciate your time. We'll have to leave it there. That was Simon Brown of Just One Lap and the host of Moneyweb Now.
Thanks for listening to the Moneyweb Property Pod with Suren Naidu. To listen to more episodes, go to moneyweb.co.za or the Moneyweb app and follow Moneyweb News for daily updates. Follow Suren on Twitter @Suren Naidu for more of his property industry content and other business stories.